Let's go deeper on channel duplication. Obviously, because of Elliott wave and structure, channels are great at showing us resistance. Price comes up, we get resistance. Price comes up, we get resistance. Price comes up, we get resistance. But have you ever experienced where price breaks through that resistance and keeps going the direction of the trend? And yes, to understand this, we have to go through Elliott wave along with ABC pattern. Mostly because in an Elliott wave and an ABCD pattern, it repeats itself. So in this impulse leg one here, we will have a small Elliott wave showing up. In this pullback here, counter trend trade, you have an ABCD pattern with the trend, impulse wave, Elliott wave, and so on with the ABC. When you have a that is a impulse wave, and so you'll have a bigger forming Elliott wave. Then on your smaller consolidation waves, you'll have ABCD patterns. And we can easily see resistance lines off this 1, 3, 5, which gives us the reversal. But really these smaller impulse waves are also 5s. Every time it comes up into a 5, it gives an ABCD pullback, just like this pattern here. Now, why is that important? Because you might see something like this with a big run up and think, oh great, I'm in an impulse wave. But what's really happening? Structure, based off of this high, making higher highs, it's creating a small channel, which is creating resistance and support. And today we're going to be talking about channel duplication. And really what you're doing is creating more resistance. High to higher high, you enter in here expecting price to change. Instead, price keeps going higher. So now what? You take your channel and you duplicate that channel up to find a good place for a double down. So just because we're focused on these main points, 1, 3, 5, doesn't mean below the surface there's not more going on that we need to be aware about, because that's why we see these breakouts of channels. All right, in this picture, the creator's talking about our typical setup, using the first high and a higher high to figure out where to enter into the trade. Perfect. This is an easy picture because it confirms our double down channel already, showing us exactly where to take our second trade. First trade against resistance, maybe you do, maybe you don't. Second trade always after channel duplication, enter, and we can see price sells off nicely. All right, here's another channel, the lows, the highs. We'd be looking at a trade here, or if your system just says duplication channels, then you'd be waiting, salivating as price broke out of this channel, duplicate your channel up, and enter on the second duplication, and price fell off nicely. Okay, this trade's going down. Just want to show you that this happens both directions. Price fell off. Where did it go? That's right, channel duplication. Enter into the trade, and the price reversed. From these highs, draw your line to these highs, extend it out, bring in the bottom side of the channel, duplicate it up. You can see price is in that resistance right now, anticipating that it will sell off. Lots of people are identifying this, but they're not telling us how to trade it because they don't realize this channel duplication system. This is going to put you ahead of everybody else making phenomenal trades at much higher highs. Even when price goes parabolic on something like Bitcoin, you can feel confident taking this second duplication trade. Even if you have to double down on a higher, you can see price quickly reversed. It just happens over and over in so many people's examples that they don't even realize what they're drawing for us. There's your channel, duplicate it up, trade one. If it goes higher, double down. I want this to be so ingrained into your mind that you always are finding the channel based off of higher highs, seeing price break through those higher highs, and being prepared by drawing a channel duplication so you can enter into a trade and take these phenomenal profits. No matter who's talking about charts, you can identify the channel duplication and where to enter into the trade, either going up or down. It's the same process both directions. This should be your most absolutely favorite picture to see. Not the Mona Lisa, but this right here. For today's example, if you struggle with higher highs and higher lows, then use the zigzag highs and lows indicator, and let's start drawing some lines. So we have lows over here, we have highs over here, old support makes new resistance. We use this line as our primary line, then bring down the other one to our lowest low. Price breaks out, we're happy, and you can line duplicate. You see price came up here, even went higher, but then came back down to the bottom of this channel. And this is about home base for me on price. I can see price coming down to this channel. I'm not going to be so demanding to make sure that price comes back down to this lower part of the bottom channel, even though sometimes it does. Now, this is one way to draw a channel. I want to look at a little bit different way. Not that this was wrong. We can see this little move right here did over 12% in 18 days. But just changing the angle of this channel a little bit by using these lows and these lows, we can see it matches pretty good with this zigzag of these highs, which gives us a little bit different angle between our first line and the resistance of the second channel. If we duplicate that up, it didn't make that big of a matter up here. Still giving you the same sell-off, and we can see price came back down to this support and bounced off here. But it also used this support and bounced off there. So both work. There's not one right, one wrong. But here's where the difference comes in. In the last video, we talked about if we used our highs and came across and did higher highs, we would enter into the trade right here against resistance. And maybe price went low enough to get us out of the trade. It did move down 5% in 55 days, which probably would have been under our break-even line. But is there another way to look at this? What if we took from these lowest lows, drawed up, and came over to our highest highs? Well, you see price didn't really tell us to get in here or here or here, just waiting for price to come up into this level here before entering into the trade. In the last video, we showed about using the tops of wave 1 and wave 3, bringing your line across to use that to show you where to enter into a trade on wave 5. In this example, we're showing you how to use wave 2 and 4, which is the counter trend part of this, drawing the line across this support and then bringing it up to whichever wave is your highest outside mark, either wave 1 or wave 3. In this case, it'd be wave 3. You draw the top side of your channel there to identify where resistance is to get into the trade. I highly recommend doing both because you're going to get different looks each time. If you can see here, we have this identified twice of entering to this trade. One time we used the low and the higher lows, drew our pink line, duplicated up, we saw resistance, so we entered into the trade. But then it went against us. Where did it go to? Well, if this time we use the highs, high, higher, high, we can see price had a little bit more room to go on this blue line. So we doubled down. And you can see that price is below both of our break evens, which means we should profit on both of these trades. On this trade, BNTX, we have highs, highs, higher highs. We came in the resistance, we took the trade. Now, if you like just to double down on these trades instead of getting in on the regular channel support, that's up to you. This would have been a great place to do that. Because if we duplicate this channel up, you can see that this was our higher double down place on this trade. Now, we're talking about how to make your channels. What if we use the bottom side of the Elliott wave instead of the top side of resistance? Well, the first thing that you can see is it would have saved us about 5 or 6 days and about 10% of the price was the difference in the way we drew those lines between the blue and pink line. Now, if we were to duplicate that up, because both trades would have been losing trades, and you can see in this case where the blue line was lower before, now the blue line is a little bit higher. So if you were to draw both lines and just choose whichever was the higher line, gives you a higher break-even point, which gives you a higher probability. This trade we entered into this morning, we saw these lows, drew our support line across, duplicated it up, thought this would be a great place to enter into a trade. Using these lows, drew our line up, using the same highs, and you can see both these channel lines are in the same area. Using these highs, bring it over, bring it down to the lowest low, channel line duplication, you can see we're right up against this resistance. Great place to take a trade. Now, what if we use these lows instead of highs, and these highs back here give us pretty much the same spot to take a down trade looking for support. Use the lower support, draw it up, we're up against resistance, or use resistance, and right now we're up against those highs. So no matter if you like using the high side or you like using the support side, I would recommend giving 2 lines to identify the best place to enter into the trade.